The first question was about contingent assets and contingent liabilities. In terms of the contingent assets and contingent liabilities, what has happened is a contingent asset is basically an asset where there is an uncertainty that it can become an asset or it can become it cannot become. Basically, it will not turn into a liability, but it has the capability or potential to become an asset, but yet it is not an asset. So that's the basic reason that the contingent assets are not recorded at all, right? So this is the point where these are recorded in the footnote. These are recorded in the footnote of any organization. They note it down in the footnote as a particular asset which can become an asset later on, but currently we'll be just noting it down in the footnote that this particular person we have sued, and maybe we'll be receiving a claim later on. And at the same time, when we talk about this area, there's one more thing that happens here. The contingent assets and contingent liabilities aren't noted because of the uncertainty that is involved in them. Right? So that's one of the basic things that happen. And at the same time, when we talk about uncertainty, there's one more thing. All these assets, once they become certain, later on they are shifted to the balance sheet once we know that the amount might be coming, and then they become an asset which is recorded in the balance sheet. So till then, it doesn't have, due to the element of uncertainty, it basically just remains in the footnote because of the concept of disclosure. Okay, now let's move on. And thank you, sir. Okay. So now the second point is a machinery was purchased for 1 lakh rupees. Expenses incurred were rupees brokerage 2%, repairs 1500, transport rupees 3000, and trial run expenses 7000, installation 4000. And then at the operating of the machine for 11 months, we have operated this machine for around 11 months, and there after 11 months we had spent 8000 on its repairs. So the question is, what particular amount shall be debited in the machinery? This can be related with two topics. This is basically capital expenditure or the revenue expenditure. Can be any of these. So when we talk about it, we know that, okay, if I get an air conditioner for my place, so what will happen in that case? If I buy an AC, then what will happen? If I buy an AC, I'll need installation. If we do not get it installed, it will not work. It is not ready to use. So how do you think a business can work if they do not have their machinery is ready? They need all the machinery ready for their work. So what will they do? For all this, what will they do is, if the machinery is purchased for 1 lakh, they'll incur all the installation expenses, all the expenses which are necessary to make it to ready to use. Once it's ready to use, then they start using it. So basically here we have paid an amount of brokerage of rupees 2%. It is basically a 2%. Then what would be the amount there? 1 lakh, 2% is basically 2000 rupees. So basically, this particular asset costed 1 lakh rupees. 2000 rupees is for the brokerage. Repairs is for 1500 rupees. And then transportation expenses were of 3000 rupees. We have also done a trial run, which will also be included here. And installation expenses ultimately costed them 4500. So what would be the amount here? What would be the amount here? It would be 1 lakh plus 2000 plus 1500 plus 3000 plus 7000. Is it coming out as 1 lakh 18,000? The answer is 1 lakh 18,000. Brokerage is a part of it. If we want to purchase it, we had to spend it. Repairs were required. Maybe it was a second-hand machinery. Without transportation, we cannot work. Trial run is expected and required for every organization. We cannot just start using the machine altogether. We need to have a trial run to find out what kind of troubles are there, or is it good to go or not. And then we have the 4,500 rupees for the installation, because without installing, how can we use that? Just like we have ACs at our place. So that is 1,18,000 as the expense, as the total value of the machinery. Okay. Unclaimed dividends is shown on the liability side of the balance sheet under the heading of. If there's an unclaimed dividend, a few people to whom we were supposed to pay dividends. So what has happened here is these people didn't turn up. We couldn't trace them yet. So how will we pay them their dividend? If we're supposed to pay them dividend, what will we do? Is it reserves and surplus, provisions, current liabilities, and miscellaneous items? In terms of the unclaimed dividends, that is shown in the area of current liabilities. We never know when will these people turn up, and we are supposed to pay them their money. We cannot keep it. If we have said that this is their dividend, we do not have any right. We'll have to give that money back to them, because we have promised them that we'll be giving them their chunk of profits. So basically, current dividends will be the unclaimed dividends will be a part of the current liabilities, where that is all the liabilities which are to be paid off within a period of a time span of 12 months or one operating cycle. The definition of current liabilities also includes one operating cycle, the cycle in which the organization works. For example, if it's about production, then acquisition of raw material, to then we have got production, then after production, that is it is ready to sale, then sold, then if it's a debtor, then recovery of money. After the recovery of money, the entire operating cycle is completed. So if any money is received within a period of less than the period of the operating cycle, it would be treated as current liabilities. Okay, now under which the heading of items bill discounted but not yet matured will be shown in the balance sheet of a company. Current liability, current assets, contingent liabilities, or unamortized expenditure. In case of a company balance sheet, bill discounted but not yet matured. Basically what has happened is, this is from a bills of exchange as well. In terms of bills of exchange, right? If I am the maker of the bill, I was a drawer, so I drew a bill in someone else's name, Mr. A, for example. He was supposed to pay me for the bills payable, but I don't have enough time. I need the money right away, so I sold this to bank, and now bank has given me money, so I have got bank balance. Now the point is, will Mr. A pay to the bank? If he won't, then I will have to recover the money and I'll have to return it accordingly, because bank will need its money. But in this point, we do not know whether he'll pay it or not. Since there's an uncertainty whether he'll pay it or not, that's why it would be treated as a contingent liability. If Mr. A fails to pay, if he says that I cannot pay, only then I'll have to go to the bank and pay them the money. Is it sorted? Okay, a contingent liability is basically a liability which may occur. It is again linked with uncertainty, and since month it is not clear whether it's certain or not, we will not note it down. It would be again noted down in the footnote. Once it's certain, then it will enter the balance sheet. That's the entire process of recording these transactions. This is from the rectification of errors. A clerical error does not include error of principal, error of omission, error of commission, or compensatory errors. The clerical errors does not include. The term clerical error basically does not include. Actually, it is E, all of them. These are different kind of errors. Formation of the question problem. Okay, if I remove the compensatory errors, no, we can actually put compensatory errors into it. Compensatory errors are those errors which are basically something that is linked with these kind of errors. But yes, I think error of omission, error of commission, and error of principle. These are three different kind of major errors that occur. While in terms of the compensatory errors, these are those errors where you will find that if there's a debit side and then there is an error of 100 rupees, on the credit side there's again an error of 100 rupees. So this kind of error is hard to trace because on both the sides the error is same. So I think, yeah, okay, it should be none of them, or there should be an example given. So I'll just cancel out this question because this question requires a proper clarity. Okay, now let's move on. Oh, nature of the share allotment and the rule it satisfies is. In terms of the share allotment, is it the real account, debit what comes in, personal account, debit the receiver, nominal account, what debit the expenses, or real account, or debit what comes out? So this is basically a rule where you are talking about the pillars of accounting or the rules, the golden rules of accounting that we have done in terms of the British approach. Under the British approach, we have real account, personal account, and nominal account. Real account includes only the assets. Personal account includes the names of the people, so it can be an asset or a liability. Or when we talk about the nominal account, it can be an expense, a loss. Okay, I think it can be an expense, it can be a loss, it can be a profit, and it can be an income. So all these things can be there. And when we talk about share allotment, it is basically an amount that we are going to ask a particular person that, sir, you are supposed to pay us the money, a certain amount of money, right? If you're supposed to pay a certain amount of money, it would be treated as a real account or a personal account or a nominal account. It is basically a personal account because this particular person, the shareholder, will be making the payment of the particular installment, that is share allotment, and it would be debit the receiver. We are going to receive this money from that particular person, so we'll note it down that way. Share application, share allotment, and share capital, all these are personal accounts and we are the receivers, so we'll be debited, kind of, we'll be debited. Now, moving on to the next question. Messrs. New Delhi Financing Company sold certain goods on installment payment basis. So this is from the point that the organization has sold their goods on an installment basis. 5 customers did not pay the installments. To recover such outstanding installments, the company spent 10,000 on the legal expenses. See, sometimes what happens is, and the people do not really pay you properly, so you'll have to incur incur more expenses, you'll have to do a little hard work to get your money back. But you had no other option, because if you don't spend money, you'll not get back your money. So basically there were certain debtors of yours who just failed to pay. So what will you do? You will go to them and we will try to recover the money, or you will hire a factor. People look for factoring. They hire some people who are involved in recovering the money from other people. So basically these people will help this organization to recover the money it might lose because of these defaulters. So is it a capital expenditure or a revenue expenditure or a capital receipt or a revenue receipt? Such kind of defaulters are basically treated under revenue expenditures, because uh, if you want your money back, you have to spend a little more now. But there is no asset being built up. Basically, no capacity is being increased. It's all the same. That's why it would be treated as a revenue expenditure. A capital expenditure can be said only when there is an increase in the value of that asset. If the capacity, earning capacity can be increased in future because of this. Right? So this is where we talk about this area. Now let's move on. When finalizing the current year's profit, the company realized that there was an error in the valuation of the closing inventory. Again, rectification of error trouble. In the previous year, closing inventory was valued by more by 4,500 as a result. Okay, what will happen in this case? Basically, what has happened is in the current year profit, we realized the closing inventory of the previous year. Okay, closing inventory was of 45,000 of previous year. What this particular inventory for this particular year, it becomes current year opening inventory. Is the concept clear? We are just looking forward to anything which was closing in terms of the previous year becomes opening in the current year. That would be noted down, and then previous year's profit is overstated and current year profit is also overstated. The previous year profit is understated, this year over, then previous year is understated, current year is also understated, previous year is overstated and current is understated. Remember, if I am making a trading account here, let's make a trading account. Closing stock is shown on the credit side, while the opening stock is shown on the debit side. So if I consider this part for any organization, what will happen? Do you know the closing stock basically increases the profits? So basically for the previous year, the profit was overstated, and for the current year it is shown on the expense side, which is impacting their profit again. So basically for the current year the profit is understated. Always look at a question, divide it into basically disintegrate it. Don't try to read the entire question at once. It's always better you start making your brain work, and it doesn't work with while reading the entire paragraph at one point of time. No, it doesn't work that way. We should always divide the question, understand it if we want to, in such a way that we can note down things and then do the question. That is gonna be helpful. If you give yourself that particular time in your conceptual understanding, it will help you in future. Goods worth rupees 2000 were distributed as free samples in the market. The journal entry will be, what will be the journal entry? Drawings account 2000, to purchases 2000, sales account 2000, to cash 2000, advertisement account debited 2000, purchases 2000, or no entry. Goods worth rupees 2000 were distributed as free samples in the market. Okay, if the goods were worth rupees 2000 and these are given as free samples means we are trying to win over the heart of the people. If we are trying to do that, it is basically an advertisement expenditure, isn't it? So advertisement expenditure, but we are also losing our purchased goods. So advertisement account debited 2000, to purchases 2000. Last question for the day. This is an important and definitely an interesting question. If you'll go through this question properly, you'll be able to understand it. Now a company has forfeited 3,000 equity shares. There was someone who was supposed to pay the company 3,000 equity shares, but he didn't pay. And for the non-repayment of 3 per share. So basically he didn't pay 9,000 rupees, right? Basically this is 3,000 into 3. 9,000 rupees is the amount which this particular person just didn't pay, on which 9 were called up. So basically, okay, 9 called up. If 9 rupees had been called up and 3 rupees were not paid, what is the amount this particular person has actually paid? 6 rupees. That means this particular person has paid 18,000 rupees. This is the share forfeiture. Share forfeiture basically refers to the amount that we have asked the other person to pay, but he didn't pay. Now he has definitely tested the patience of the company, then the company decides that this is it. We are not going to let him stay as a shareholder of the company, and we are now seizing his shares. So the company will seize their share. But the point that arises here is, what is the question saying? It says on forfeiture, the share capital to be debited. Always remember, the share capital that would be now cancelled out would be the amount which we have called till date. If we have called only 9 rupees and we haven't called the last 1 rupee, then the amount that would be debited, share capital, is ideally never debited. It's basically a credit item. But if there is a decrease in share capital, we'll have to cancel it by putting an equal debit. So this will cancel out the credit scenario. So it is basically 27,000. 9 rupees have been called up and 27,000. And okay, let's just clear it up. Hmm. So basically 9 minus 3, that was our share forfeiture there. And since 9 rupees were called up, whatever your called up amount is, that is the amount of share capital that you will be cancelling for all the defaulter shareholders. So basically the defaulter shareholders were 3,000. So basically it is 27,000. There it is. So the correct answer is A. Whatever amount that you call up is ultimately the amount that has to be cancelled. If you're preparing for JAIIB examinations and exactly looking for a course, then in terms of English, we are just about to start another batch on 16th of August. That would be a live batch again. So, which if you would like to know further, then let's look forward to that. Okay. So, you can go on to our website Adda 24/7, or you can also open it in our app. It is better that you open up it in the app because you get further discounts as well. So let me give you an idea. Here in the government job section, this is the first level, JAIB and CAIIB. So what you can do is, this is JIB examination November December English. For November December English, we are just about to start another batch from 16th of August. So this is what you can see. You can see it is going to start from 16th of August. So there you'll have 125 hours of live lectures, and then we have test series, we have got ebooks as well. And for any further study plans, you can click on these and you can find out the details. The timing for each and every class is stated here. We are starting with AFB on 16th of August, that is from 8 a.m. to 9 a.m. LRB starting at 5 is on 5 September, 6 a.m. to 7 a.m. And for PPP, we are starting at 5 on 5 September, 9 a.m. to 10 p. 9 p.m. to 10 p.m. So there are the three timings for the classes. So what you can do is you can check out our further details for this. And in this batch, we have got LRB by Nikita ma'am, and then I'll be taking up your area of accountancy, and Amanjot ma'am will be taking up the class, the subject of PPP, and AFB is also taken up by Priyanshu ma'am. She'll be leading further. Then you can look forward to this particular batch, and you can find out the classes taken up by whom. So this is where you can look forward to it. You can check the plan here. So if you would like to check where when is the class. So for the further details, what you can do is you can find the details here for this particular class. So they are the entire pattern. So Priyanshu ma'am will be taking up the classes, and then I'll be taking up with the classes. And in terms of PPP, you can find the details. The study plans are available for your detailing. So you can find out by what time the classes would be over so that you can study properly. So what you can do is if you're preparing for this examination, all you need to do is click here on buy now and use the code Y541. And this will cost you 3679.7. Okay, I hope. So let me give you, this is the view. Then you can see that it would come out if you use the code Y541, the amount would be reduced to 3679. So this is where you can look forward to this particular area. In today's class there was a little glitch in terms of the sound in the beginning, but by the end it was sorted. So I hope you can review all the questions. You haven't missed any questions. I've explained it again, so kindly go through that. And for any other further details regarding this examination, kindly check out our website, or it's better that you look forward towards app because you can get more discounts on the app. Then what are we waiting for? Kindly go ahead and check out our courses regarding JAIIB as well as the CAIIB examination. So for JAIIB examination, the batches, new batches coming up on 16th of August English. So you can check it out. Thank you.